Hey everyone, Tom here. In this video, we'll be discussing the stock market news for the week ahead, as well as the key earnings reports that you need to be looking at, and our technical analysis thoughts on the S&P 500 right now, using the top-down approach and price action. There's a lot going on this week, so stay tuned. I thought the best place to start today's video is to discuss the rotation that went on last week in the stock market. So here we have the S&P 500 in terms of the large companies as a heat map. Notice something straight away. Microsoft, Apple, Google, Facebook, and Amazon, the big five that make up the biggest percentage of the S&P 500, were not the leaders. In fact, they were the losers, yet we were positive on the S&P 500 as a whole. And this is the first time really during this crisis we've seen this. Generally, Microsoft, Google, Facebook, Amazon, Apple have been the leaders, and the other ones like Nvidia, Netflix, PayPal have also been doing well. So what we've seen is we've seen a rotation out of these stocks as people and traders are taking profits. And we're seeing a rotation into the underloved areas and into areas where people think that earnings are going to be beating expectations. Why is this? Well, earnings scorecard is in for the week, and we have 9% of companies coming through the S&P 500 so far, with 73% of them reporting a positive EPS surprise and 78% of them reporting a positive revenue surprise. This is pretty important because does this mean the stock market's cheap? No, it's certainly not. I mean, the valuation, the forward 12 month is 22.3 and the PE ratio is usually about 16.9 over 5 years. But this just points to the fact that they're better than what potentially Wall Street and the rest of the traders were thinking. Here's really a chart to show you, I guess, what the Federal Reserve has done to the stock market in recent times. Here's the S&P 500 change in forward 12-month EPS versus change in price over 10 years. And notice they, track each other with a little bit of divergence each way in terms of how far away they are from each other. But this is extremely far away. In fact, it's the most on this chart anyway. We have 12-month EPS down here, yet the stock market is up here. And when we start to look at the unlimited liquidity that the Fed is kicking off, of course, that starts to make sense. So it's really not so much whether you think it's good value or not. It's just that it's beating the expectations of the market and the Federal Reserve that's underpinning the market right now. So the Fed actually increased their balance sheet last week with the first time in a long time, with them starting their Main Street lending program. Let's take a look at the assets. Here we have them spiking up, of course, during the crisis, hitting that peak of $7.168 trillion, declining down to about $6.92 trillion, and then slightly spiking up with this particular one saying $6.958 trillion. So the Federal Reserve is being used in some liquidity areas, and of course some aren't even needed. They've got so much stimulus in the markets right now, they've actually pulled back a little bit, but it does show that the Federal Reserve is very happy with where they're at. And it's really about whether the stock market actually can perform in terms of we have companies actually beating expectations. So let's take a look at the stocks for the week ahead. If you don't already have one of these, you need an earnings report calendar, specifically one that usually gives you whether they're before or after the close and the most important companies for the week. Earnings Whispers is a great website that gives you this capability. I think you've got to sign up for their basic kind of calendar event and they send it to you. So we have Tesla, Microsoft, Chipotle, Snap, Coca-Cola, Twitter, AT&T, Intel, just to name a few massive companies doing their earnings this week. So it's a big one. Which ones am I looking at? Well, I think Tesla is very important. Remember, it's after closed for Tesla. So if you're trading that particular stock, you need to be aware of whether it's before or after, as it can do some serious damage if you're leveraged. But Tesla's going to be one because this is basically the one that I'm seeing a lot of retail traders in, and the one that's showing that real sign of incredible bullish bubble-eating tendencies. Microsoft's another one because of the sector and it being the biggest stock in the index. And of course, I also want to look at Chipotle just because that's an industry that I'm looking at just as a whole during this. And I want to see how they've performed over the last quarter. So very important companies this week, and we will be watching each day. So make sure to subscribe and hit that bell if you want to see our thoughts on every day this week and how the market is interacting with these zones. What about the major economic reports from the Fed and key speakers? Well, here is the report here. Of course, there's a few things going on. The main thing is always going to be what's going on with these continuous jobless claims that we're seeing every Thursday. Will they come in higher? Will they come in as norm? They've been dropping over the last couple of weeks, but that doesn't mean that they're going to continue dropping. And it also could be coming out with certain statements. Now, we've seen things like vaccine results come out at positive points when they need them. We've seen the Fed understop bearish sentiment multiple times out of the blue. So anything can happen, but this is the bit of news for the week. So let's now discuss our technical analysis levels for the S&P 500 moving forward. Well, the key things I think is we want to draw our monthly first, and we want to recognize where the current market is. So notice we haven't had a body close really above this zone, this 3250. Even before the crisis, there were wicks that went above on the monthly, but no body close. This to me is important because we saw during the crisis, no body close underneath that 2500 zone. And if this does happen, what might happen is something like this. Comes down, tests its roll reversal, and then goes back into the peak. I think this will act as a key point of support or resistance. Notice what happened on the left-hand side over here. No body close really above this zone. It closes above this zone on the monthly, comes back down, tests the area for a while, hovers there, accumulates, and then moves on to the next level. So key level here in terms of resistance, and it's even more key when we jump down through the smaller time frames. So the monthly, they're kind of the areas that we're looking at right now. When we go down to a weekly, things change a little bit. So I'll actually zoom this in. I talked about last week, we've never seen a body close above the 3200 zone. Well, we have seen one now, and it looks pretty aggressive in terms of the bullish caliber of this candle. Is it above the wicks? It isn't. It actually got to the 3230, which was our key resistance for last week, and then wasn't able to puncture that level. If we see earnings results this week beat expectations and continue beat expectations, I would expect this level to be beaten and the market to move further forward. Now, does that sound ridiculous? Well, unfortunately, that's the way the market is right now. And the expectation versus the reality is very, very important. So we mentioned this because we mentioned that it's basically a channel. And if it does break the channel, it's going to go the body length, which is 200 points. And that puts us back into pretty much the previous highs. So around that 3,400 zone. So we're expecting that if the market's going to break this on the smaller time frames, the weekly also closes above this zone, that something like this is going to happen. It's going to bounce up. It's going to come back down. The 3230, which acted as resistance, will act as support this time. And then the market will pressure higher to hit that 3,400 zone and possibly even break it and go to all-time highs. This is important. This is the kind of thing that we want to see. In terms of the moving averages, we always have these moving averages on here. So we've got the red line, which is the 20 exponential moving average. We've got the blue line, which is the 50 exponential moving average. And we have this 200 simple moving average green line. These will all act as dynamic support like they've acted before as dynamic resistance over here. So this has been the resistance and support. So if the market was to bear down over the next week and the channel and not be able to break above, this is still going to be a heavy buying zone. Key psychological 3000, bottom of the channel, and dynamic weekly moving average support. This is important because look at how the market has come off them before. It likes these moving averages, and that's why you should have them on your chart and have them in your analysis whenever possible. So the weekly, we're still kind of trapped. We've closed above, which is a bullish signal, and that coupled with the sentiment is very important. What about on the daily? Well, the daily is showing us the same kind of thing, except that we're honing it in a little bit with this precise level. So the 3232 we have not broken above, and this is the real market, not the futures. Like we always like to do on this channel, always look for confirmation on the real market, not the futures market, where the real volume is trading. There's a little bit of manipulation and possibly fake signals that happen on the not real market as in the futures. So we do want to use this chart whenever possible. If the market is to sell off this level, What are we going to expect? Well, we expect it to pretty much come down to this 3150 zone, find support. There'll be the 20 moving average here on the daily, and this will be the level where the bulls and the bears would fight it out. And then if it got underneath that zone, we'd be putting pressure back on the 3000 level. I think actually if it gets through here, gets through the 3120 on the futures, and then continues to sell down, we're pretty much going to 3000 would be the most likely kind of scenario. There'll be big buying pressure there, and then we might even stay within the channel for a while. It really comes down to how many of these stocks beat earnings. One of the things I'd do is I would be setting alerts above this 3230 if I was a day trader or a scalper or anything like that. And if it gets above this zone, I'd be looking for a confirmation close, which basically means the candle closes above on the daily, and then looking for a retest where it closes, potentially even goes up for a couple of days, like maybe 1-2 days, and then it comes back down and the 3230 zone acts as support. So the previous resistance will act as support, and this is where we want to see that change of trend on the smaller time frames, and we take it long for the distance of the channel. That's the kind of idea into the previous peaks. That's the type of way that I like to trade these. There's a high kind of reward trade that you can do for the risk as well, which is always to sell the top of the channel and then take it down to either the middle of the channel or the low. That happened a little bit last week, but we saw quick buying pressure because, again, the earnings are coming in better than expected. So the daily is showing us that so far. If we go down to the 4 hour, what is happening here? Well, the 4 hour is just even more defined. Still, no body close above the 3230. The reason we want to go from a monthly, weekly, daily into a 4 hour is we can see how the real market is reacting. The real market is still not closing above this zone. The futures might be, but the real market and the real volume has not done so. So we're still trading above. We're pretty much seeing that the market is trying to trend higher here with a series of higher highs and higher lows. It's been respecting this 20 moving average, even more so on this 4 hour, with wicking off it and quick body break above it. And we can see that if it comes back down here, that we've even got previous kind of little bit of resistance over here at the 3180 that might act as support as well on the smaller time frames. So if you're someone that's trading a 15-minute or 1 hour chart, you might want to dial in there and have a look at how it's all moving. Will we see indicators showing us divergence up here? We certainly will. If I put stochastic, I'm sure, or MACD or any of those things, you generally will see many of them showing you divergence signs. They'll also be showing you weakness signs, even overbought signs. But I like to follow the price action first. And then when I dial in that price action, then I bring my indicators in and I start looking for other reasons. So as everybody would know, on this channel, we like to use 3 to 6 reasons to be in a trade. And right now I'm seeing yes resistance, but because of the price selling and then the strong price buying, there's probably not enough for me here. I always talk about how you've got to pick your battles, and there's key levels that you're going to pick your battles at. Breaks above the top, obviously. Breaks through the middle would be key because you'd be getting through this 50 moving average here as well, this 3150 area. And then of course, the buying at the 3000 would be a key level. So we want to set alerts for all of those. It's pretty similar to last week, and we're just really biding our time and hoping to see signals that will allow us to take opportunity. So in terms of the S&P 500, that's probably where I want to leave it this week. 3230 still remains key resistance. 3150 kind of remains that key support zone down here, wherever it's bounced down. We have that 3180 on the smaller timeframes potentially, and the 3000 level. When we go over to the dollar index, I just want to quickly show this. This is the weekly US dollar index, and it shows you the support that's been found on the wicks all around here. When we dial that into a daily though, we can start to see that it's been trending down. It's been doing so in really a big kind of channel. Go into a 4 hour and we'll notice it even more. Take a look at this. This is a very key channel that's happening on the dollar index. As I discuss all the time, the dollar index shows us risk on or risk off sentiment. And right now it's been relatively risk on. That shows us with those defensive like tech stocks being rotated out of and movement into the less loved sectors. That's showing further risk on and further belief that we're seeing an economy recovering. Now, whether we want to believe that or not, it could just be a bubble, but the price action showing us that. Look at this support becoming resistance, where we've got the support over here becoming resistance. It's now trending up. If we see a break of this zone here, which is the 96.30, I think that would be key to psychological level of the dollar index. Now, the dollar index has been remaining in this channel down. If it breaks through here, what will be happening is we'll be making really a change of trend on the 4 hour. And I'd expect something like this, where it would break through, come back down, test this level where previous support became resistance, which will become support again. It'll have all of these things. It would have gotten through all of the moving averages as well. And then that might see further bullish movement in the dollar index coming off the big base support. That happens, we could be seeing selling in the S&P 500. So these are the ones that I'll be watching. I'll be sending alerts for the dollar index as well and flowing them all together. So hopefully that helps everybody. If it did, remember to subscribe, hit that like button, and of course, comment down below with your favorite indicator that you use in the stock market, whether it's stochastic, MACD, RSI. Let me know, because I want to know what the general community uses, and I can cover that a little bit more. I use them all, but I'm first and foremost price action. Have a great week, everybody. Bye.